Welcome to Geojit Spotlight. As expected, Budget 2023 is a growth-oriented budget. Almost every factors needed for propelling the country's economic growth are covered in this budget. The major focus is in increase in capital expenditure. Capital expenditure outlay has been increased by 33% by 10 lakh crores, almost 3 times the outlay made in 2020. This is an extremely positive movement. Fiscal deficit containing at 5.9% is another positive factor. On personal taxation front, there were a lot of expectations on various aspects, tax slab and rate changes, limit increase in deductions, exemptions, etc. But no such changes for taxpayers following old regime is given. But there is a good relief for new regime's tax structure, especially for the lower income section and for the ultra HNIs. So this shows there is a clear push by the government towards the new tax regime. All tax favorable changes are applicable only to the new regime. This was expected as there was hardly any takers for the new regime during last year. So government was to push for conversion from old to the new regime. Taxpayers can continue using the old regime if favorable. Now let me explain the benefits of tax changes introduced by FM. For those who have adopted new regime, income tax rebate limit has been increased from 5 lakhs to 7 lakhs. This means that people who have income up to 7 lakhs need not pay any income tax, and this was limited at 5 lakhs as per the current structure. Standard deduction also is extended for taxpayers in the new tax regime, which was not available in the current setup. Now let me read through the tax slabs as per the new budget. It is 0 to 3 lakh, up to 3 lakhs nil, 3 to 6 lakhs 5%, 6 to 9 lakhs 10%, 9 to 12 lakhs 15%, 12 to 15 lakhs 20%, and above 15 lakhs 30%. So 30% is intact. The higher tax rate is not changed. So the basic tax slabs have been revised, providing relief to taxpayers. For example, an employee earning 9 lakhs will be paying 45,000 income tax as per the new tax rate, which is 25% less than the earlier taxability. He or she would have paid 65,000 as per the existing tax rates for the same income. Another example, an employee earning 15 lakhs will be paying 1.5 lakhs as tax, which is 10% of his or her income. There is reduction of 20% from the existing liability. Employees at all tax levels are getting this benefit if they opt for the new regime. Also, the highest surcharge rate is reduced from 37% to 25% in the new regime. Surcharge is applicable to the higher taxpayers with minimum 50 lakhs taxable income. Hence, the maximum tax rate is reduced from 42.74% to 39%. This was expected as there was a demand to reduce the tax rate difference between the highest tax rate for individuals and corporates, as corporate tax is only 25%. But there is a change in the capital gain tax on sale of housing property as per Section 54 and 54F of Income Tax Act. So now the exemption will be capped at 10 crores, which is going to impact the ultra-rich category. There are some other benefits introduced by the Finance Minister. Tax exemption limit on leave encashment for non-government salaried employees is increased from 3 lakhs to 25 lakhs. Another one is tax investment limit for senior citizen savings scheme has been increased from 15 lakhs to 30 lakhs. A new saving scheme for women called Mahila Saman Savings Certificate is introduced with fixed interest rate of 7.5% for 2 years. Some more expectations were there from the market. For example, harmonization in capital gain taxation was also expected, both on holding period and the tax rate for all classes of assets, but no changes in capital gain tax is being announced. Thank you.